strength from the Bitcoin bulls may have just been lost. Let's understand why.
Okay guys, make yourselves comfortable. It's really important you digest this. Grab some popcorn if you need to, because this cannot go over your heads. The reason as to why potentially this Bitcoin recovery that we've seen of late could well and truly be hampered. Now, I did a previous video, okay, explain the crypto sell-off that was that commenced at the back end of 2021 and carried on into this year. Obviously, we've bounced a little bit at the moment, but this recovery could very much be hampered. Now, remember the sell-off I explained. The key factor was down to the Central Bank of the United States, the FOMC. They started positioning the markets for raising interest rates. They started positioning the markets for withdrawing their stimulus, okay? Now, remember, we had low interest rates globally. We had a lot of stimulus in the economy due to the pandemic. When COVID hit back in 2020, sort of January, March time, all the central banks started lowering interest rates and pumping loads of money into the economy. Why? To try and improve people's affordability, so people would still borrow and people would still spend, okay, to stimulate the economy, to try and, cushion the blow from the damaging impact of the pandemic. So what happened there during March, let's just quickly refresh our memory. I just want to quickly show you, okay? It's just important that we just remember. Look here. Back in March 2020, and this was the initial sell-off that we saw in broader markets because of the pandemic. But then look at all this pumping. I explained this. This was due to low interest rates and stimulus. So people had all this cash. They're like, yes, let's go and buy some stocks. Yes, let's go and buy some Bitcoin. Okay, so we had all this pump because the economy was just loving all this cheap cash. So that's what pumped Bitcoin up. And then, as I say, because that started, there's talk that this was going to start getting withdrawn and interest rates would go up, Bitcoin started to cool. Now, why has Bitcoin just come off? Essentially, it's come off because of this. Now, let me just show you the dollar. I need to show you two things. Firstly, the dollar. Look at this ascending trend line. I'm going to bring this all together in a moment. Look at this ascending trend line. It's been in play since the back end of May. You see how that's been supported, right? You saw this big pullback with dollar in the latest week, and then you saw that rise with Bitcoin over the last sort of week or so, last couple of weeks, excuse me, right? So that sort of ties in, and you see how this trend line's been defended. Now, this is really important. We had this, okay? This was on Thursday, US CPI, inflation. Now, inflation running hot, okay? Hotter than expectations, hotter than the previous day. Again, hotter than expectations, but in line with the previous. Now, what does that mean? Remember, when inflation's higher, a central bank has to act faster. Okay, they have to act fast in terms of raising interest rates and withdrawing stimulus because they don't want inflation to run too hot. Inflation's rising because people are spending. So companies of goods and services are putting up their costs because of all this spending, right? So inflation rises. Now, so the dollar's bounced off that trend line thanks to this as well, the higher CPI. But then let's take a look at the US. I need to explain this. The US 10-year yield. What is the US 10-year yield? It's the return that you're going to get as a bondholder of the government bond. Here we go. Okay. It's the return you're going to get for holding a government bond, with 10-year maturity. So the yields are rising at the moment. Look, they're rising. Okay. At the moment, they're around that sort of 2% mark. So that's a good return. Remember how I said people are taking their money out of Bitcoin and putting it into fixed income because the Federal Reserve are going to be raising interest rates, all right? One of the reasons why Bitcoin bounced was because there's a number of FOMC members recently that said that they're through cold water on potentially raising faster, raising by more. Markets have priced in that they're going to hike by a certain amount in March, 25 basis points, but then there are some bulls that are really, and hawks, that are really expecting 50 basis points because inflation's high. But now that inflation is higher, as the markets was calling for one of the reasons for the FOMC to act faster, inflation's higher. So maybe the FOMC does have to raise interest rates by more, okay? So then that affects Bitcoin because, again, people are like, yes, we're going to get more yield return in a safe investment, US 10-year government bond. We're going to get more return. So let's just take our money, some more flows out of Bitcoin, out of cryptocurrency, and go and stick our money in the US government bonds because we're getting a nice fixed return there. So if you look here, let's start explaining Bitcoin now. So we're seeing a bit of a pullback. We had this big run. Remember our question, is this going to be a bull trap or not? It still very well could be. We did lay foundations for a recovery. We did break out of this descending trend line that's been in place since November. But I said, let's keep an eye on this big sort of 43, 45K area where we sort of lost we're in a bear trend here anyway. Look, you can see big rejections there. Here, now we're retesting. This is a big retest. If this doesn't hold, the floodgates are open and we're going to come all the way down towards sort of 38K and go and retest this trend line. Okay, and obviously if that doesn't hold, then we're going to suck back below, as I mentioned in the previous video, and we're just going to fall and go and print a new lower low and go and respect this market structure. If this does manage to hold this bull case, okay, and markets don't pay too much attention to the broader financial markets, if cryptocurrency just sections itself off from that, which I don't know, I kind of see it's unlikely, but if it does, and this holds, this technical retest here, this key area, then we're going to go up for a big challenge, okay, of 48K. Well, say 48.5 and go and retest. Remember this? Left shoulder, head, right shoulder. Go and re-challenge this neckline, retest that. And obviously if that breaks, we're going to the moon. Again, I explained that in my previous video. So just some quick takeaways here. Reminder, if the Federal Reserve starts raising rates faster and by more, okay, this is bad for Bitcoin because people want to take their money out of cryptocurrencies and go and put it in safety, in fixed income. Okay, so that just to bring that in perspective for you. And I believe that's why we've lost some oomph from Bitcoin on the back of that US CPI number there yesterday, and then tying with tandem with the rising US yields right now, as markets think that the Federal Reserve are going to raise faster. And then technically here with dollar supported fundamentally by the higher inflation, but then technically by this ascending trend line. Guys, please do not hesitate to check CoinCasso, the link in the description, coincasso.com/IR investor relations, because there's a massive opportunity for you to get involved, own part of the exchange, get involved in exclusive NFT drops, get involved in CoinCasso's native token. Huge benefits potentially there. Obviously, when cryptocurrency is in a bear market, exchanges gain. When cryptocurrency is in a bull market, exchanges gain. It's a very, very good business for cryptocurrency exchanges. So do not hesitate to become and be part of that. Smash up the subscribe button, smash up the like button. Let's get it.